Well, good morning, traders, or good afternoon, depending on where you're calling in from. Welcome to the followmetrades.com special live trading room, where we're going to be watching the market react as the Fed announces their latest moves and gives their forecast on the economy. I'm looking forward to it. Typically, it's exciting. It's exciting. All right, we got a good room. We got a lot of people logged in here. So again, welcome. And just before we get started, just a real quick disclaimer that everything presented in this room is for education information purposes only. I'm not a financial advisor. I'm a trader. And I'm going to be offering my view on the market based on rules and techniques that I've developed over the years that work for me. If we have any particular trades, I'm going to call them out, and I might be taking them right in front of you if my criteria is met. But as any whatever trade any individual makes, any investment they make, solely their decision. They assume the risk for that. All trading and investing involves risk, and I'm not giving financial advice. I'm showing what I do. All right, always got to get that out of the way for the lawyers. It's important, good reminder too, just there is risk in trading. But hey, I'm glad you're here. Like we said, we got a lot of people logging into the room, and this should be a real fun event. I always look forward to this when we get the Fed announcement coming out, and the market typically reacts. And over the last couple of days, we've had some pretty good price action, but this should help set a real direction. The S&P's been trading in a sideways market, pretty broad channel, but it really doesn't have any clear direction. And this may just establish a direction for us for the near term. So it'll be fun regardless. So we got about 28 minutes till the actual report comes out. So it's a good time just to, I'll explain my chart setups here. I'll talk to you about the setups that I'm going to be looking for. If we have a few minutes, I'll analyze any particular charts that you're interested in, give my opinion on those, and then we'll be ready when the report comes out. We'll have some trades. I got a handful of trades teed up that if they go the right way and hit my criteria, we're going to jump into them. Tony says last one was a sleeper. Hopefully a little more action today. Yeah, we'll just have to see, right? We'll just have to see. But it's good. You got to be ready, right? You got to show up. That's half the battle, showing up and to have a plan and to be ready. So I see, hey, Brian, good morning. Rajendra, I hope I got your name right. Welcome. It's always fun with a large group like this to see where everybody's calling in from. So while we're waiting, just getting settled in here to the room, why don't you type in, the city, state, country. What's your location? Where are you calling in from? Well, Brian's calling in from Linwood, Washington. He could have drove down here and been in the office for this. That's really close. I'm in Olympia. Tallahassee, Florida. Queens, New York for Miss JDR. Houston, Randall. Anacortes. John, well, it's not quite commuting distance from Anacortes. It's beautiful up there, though. London. Peter's in London. Good to have you here, sir. What time is it in London? It's not the middle of the morning, right? Craig, DC. Uh-oh, 10 miles from the shooting. That's a bummer, man. Eagle Rock. Ken from Hong Kong. Well, it might be the middle of the morning there. Sorry about any background noise. Right as I schedule this live trading room, this webinar, the city decided to get the concrete saws out, do a little repair work right outside the office window. Isn't that awesome? So I'll be muted when I'm not actually talking. And just apologize for that. Britt, Sweden. Mike, New Jersey, Fairlawn. Richie from Tuckahoe, New York. Well, I've never heard of that. Norway from Jan Eric. No way, Tamar calling from Israel. Man, we don't have anything from Africa, South America yet, but we're getting pretty good part of the globe covered so far. John from UK. John from Ontario. Clemson, South Carolina. Nice. Vancouver, Canada. Richard, I was just up there last summer. Motorcycle ride. It was awesome. Germany. Nice. Alexander's calling from Germany. Connecticut. Peter says it's 18:30. So that's not too bad. Got your dinner while you were doing this and a little glass of wine. Kick back and let's watch the market, huh? Dorset. 1:30 a.m. for Ken. Yeah, sorry about that. I don't control the market hours, but good for you. You're a serious trader. Bavaria, Indiana, John, Nigeria. Hey, we got Africa. We got it covered. Austria. Miss JDR says, please tell us about you. Well, my bio's on the website. I don't want to bore you too much. But I am Dean Jenkins. I'm the founder of FollowMeTrades.com. I've been a trader for about 20 years. Been a technical trader for going on about 7 years. And 2 years ago, I launched this service where I started, I just was trading for myself and connecting with other people. And people, hey, could you tell us your trades before you take them? Looks like you got something going there. And turned into a service. Started charging a subscription fee. Got a pretty good following. People started asking, how do you do that? I put together some courses. So I'm a technical trader. I use a combination of Elliott Wave and Ichimoku Cloud. I call it East meets West. And when two different systems agree, it's pretty powerful. They don't always agree. Probably 1 out of 20 charts we look at has a really good setup that meet my criteria, but when they do, it's really powerful. So I'm going to demonstrate that setup here. We'll be looking at charts throughout this session and seeing if we can get some trades going on. And Miss JDR says, what do I mostly trade? She's a futures gal. Yeah, so we'll be looking at the futures market. I take cues from the future market. I primarily trade stocks and options, but the futures markets can give us a real insight into particular sectors and indexes and stuff like that. I think futures are great for day trading. I'm hesitant to hold futures positions overnight, and I like to take a little bit longer time frames. So that's where I'm at. Mike says good for beginners. Good, good. And feel free to ask any questions. I enjoy teaching. I do quite a bit of it, and happy to answer any questions that you might have. So I'm going to bring my charts over here. This is my intraday chart setup. Make sure the screen refreshes here pretty quick. Boy, I hope we're not going to have a bunch of lag time. That just kills it. Okay, we got my charts here displayed. So what I've got, 6 charts here. On the right-hand side, I've got the S&P 500 E-mini futures. On the top, I've got a 10-minute chart, and on the bottom, I've got a 5-tick range chart. Similar to a tick chart, but different, right? So there's no time involved in a range chart. It's just, did price go greater than 5 ticks in one direction? That completes a price bar, and the next one starts to paint. So I like the 10-minute for, an intraday trend, and then the 5-range tick for very high-resolution current movement. In the middle, I've got gold, 10-minute chart on top. I'm using an 8-tick range chart on the bottom. And then over on the left, I've got crude oil futures, 10-minute and 8-tick range chart. So that's my chart setup on my screen here. And I'm going to show you a trade setup that I use for trading the news. I call it my trade the news setup. So typically, or not typically, sometimes, a lot of times, when big news comes out, like the oil report or a major economic report or the Fed announcement, price will take a big dramatic move, right? You can see here's a short move. This is the ES. What I like to see, here's the initial dramatic move right here. There's the initial move after the news. I like to see a retracement to a Fibonacci level, and ideally it would get up between 38.2 and 61.8. It can fall a little bit short. It can go a little bit over, right? But then I want to see proof of that. This is the initial move. This is a correction. I want to see a continuation of that move or of that major trend, right? When that happens, I can take a trade when a new low is put in here, or the highest probability is when this low is taken out. And then typically, if this criteria is met, an initial move or retracement, and then evidence of lower low, lower high, new low going in that original direction, we can get a pretty good trend and get a pretty good trade out of that. Here's what it looks like to the long side. Here's an initial move up. There's a retracement right into the Fibonacci retracement zone. Boom, We got a nice trend going up that way. So that's a simple trade the news setup that I use, and it worked this morning. The oil report came out, the oil inventory report came out, and we got that set up, and I went ahead and took a trade on oil this morning. So here we are on the range chart, and I'll show you the setup. And it worked out beautifully. I run a live trading room, and we were in the room this morning. Several of the room participants are here. They can testify. We actually really took this. So here was the initial move on oil after the report came out. It was right here. On the range chart, it can happen pretty fast, right? On the 10-minute chart, it was 1 or 2 price bars. But we got the retracement I was looking for. It didn't make it into the zone exactly, but I said it can go a little bit short. And then look, we had a low, lower high, new low. So we went ahead and took an entry. And I traded this with USO. Just took a quick short-term trade. I expect to be in it a couple days. But I went short USO, actually bought a put option contract on that. And we caught it right here, and it was a beautiful thing when it just kept going down. Yeah, you can see what it looks like here on the 10-minute chart. It was pretty dramatic. And you couldn't even see the retracement, right? It happened pretty fast. Initial move, retracement, and we caught it. And what a beautiful move down on oil, and we're in that trade still in profit. Liev, I hope I'm saying your name right, is asking what's the principle behind the triangles. These are called pyramid trading points. And I use Dow theory in my trading. You've heard me already just say higher high, higher low, lower low, lower high, right? So that's how price moves in a trend, is in a series of, an uptrend, it's higher highs, higher lows. And these triangles simply paint higher high, higher low sequences where the particular ratio of the up leg to the down leg criteria is met, and when the new high is put in, a pyramid gets painted. Helps you confirm a trend, and the base of these pyramids give you outstanding stop levels to trail your stop to in a trend. And so that's actually software from a vendor called traderscoach.com. I'm good friends with them, work with them closely. But that's the quick story on them triangles on my chart. Pyramid trading points. They're pretty powerful. Yeah, you're welcome. You're welcome. Okay, we got about 18 minutes till the report comes out. So what do you guys think the Fed's going to do? The consensus is quarter point rate hike in June, and then talk about when the next one would be. So let's do a quick poll. Polls are fun while we're doing this. Let me make sure I got the right one, and then we'll see what you guys think about what the Fed's going to do here. And I gotta make sure it's right. I don't want to launch it and then have it be wrong and look stupid. Okay, we're ready. I'm launching the poll. So you should be seeing that. There you go. So go ahead and put in your answer. What's the Fed going to do with rates at this announcement? Quarter point raise, a bigger raise, or do nothing? What do you guys think? Oh, got a bunch of answers coming in, and there is a clear winner already. I'll display the results here. We'll give it about 3 minutes for you guys. Get your answers in. Oh, Nadine's got an opinion. It's going to do a raise, quarter point, but it's a mistake. Negative rates. Ooh. I don't know, Brian. That would surprise everybody. That would cause a reaction for sure. Bernard agrees with Nadine. Tony says quarter point raise and the market's going to go up. Okay. Hey, Craig says, why in the world are bonds going up when the world is expecting a rate rise? Good question. Good question. That's still get some more answers coming in here, but it's probably a rhetorical question, Craig. Why are bonds going up when everybody's expecting a rate hike? It's a good intro. I'm a technical trader, and I believe in trading the reality of the markets, and the only reality in the market is price and volume. The rest is speculation, right? Indicators are typically lagging. They tell you what happened, and trying to figure out the moving parts and go, okay, if the Fed raises high, rates are this, and GDP that, right? You can kind of go crazy trying to figure out what should happen, or looking at it and going, why did that happen? What I've found over time is it's easier and simpler. I try to keep things really simple. It's easier and simpler and actually more effective to go, what is happening, right? Trade the reality of the markets. And price action, it turns out, if you just focus on the price patterns, right? Not all charts have a pattern that makes sense, but when they do, and I told you I use a combination of Elliott wave and Ichimoku cloud, when the chart makes sense, when there's a recognizable pattern, and if if there's, say 8 steps into a pattern and you get 5 or 6 of them in a row that meet the criteria and fit a known pattern, the subsequent steps become fairly high probability, and that's what I'm looking for in my trading, fairly high probability. And Bill, apparently a serious mathematician, he says if you use a third derivative indicator, no lags. Okay. All right, I think the answers are pretty well coming in, so let me show the poll results. There we go. And the results, 68% say quarter point raise, 4% say a bigger raise, and about a quarter of the people, 26%, say you're going to do nothing, stand pat. So consensus is for a quarter point raise, and we'll see. Won't be very long before we know the answer to that. So let's check it out. All right, let's go ahead and look back at the charts now. Get my screen back the way I want it. Okay. Daniel says, what does it mean to be high probability when most traders do a little better than 50-50 on any given trade? Yeah, and it's tough to assign a number, right? It's tough to assign a number, but let's look at a couple charts. I'll show you the pattern I'm looking for. See what you think. You can agree with me, you can disagree with me, it's fine. The more orderly a market is, the more I like it. So here's a trade that we are in. And I'll drag this chart over. This is a daily chart. I apologize again for the background noise if you hear that. Hopefully it's not too obnoxious. Right? So simple Elliott wave theory tells us if you get an impulsive move, and this on the left-hand side of the chart on APC is clearly an impulsive move, right? Nothing more complicated about it. A lot of people roll their eyes at Elliott wave and there's 1,000 patterns to memorize and practitioners all argue about it. I keep it really simple, right? Elliott wave says, hey, the market moves in waves of pessimism, optimism, and then pessimism returns. It's that simple. You get a big impulsive move. This is clearly the biggest move on the screen, right? And this oscillator helps me confirm that, right? We get a retracement to it. It retraced to an expected Fibonacci retracement level. It went a little beyond 38.2 to 61.8, but it stayed below the maximum retracement level of 76.4. So perfect. I come and I see an impulsive move, a correction to it, and then I see evidence, lower lows, lower highs, and I see it breaking the Ichimoku cloud, which predicts some support areas until it breaks. When I see that break into the next move, that's when I think there's a good trend going on, right? Now, APC, we actually took this trade as it broke the cloud. We took this in my trading room at, let me find it, entry price of 59.58. So I'll reset this line so you can see 59.58. So The ideal entry would have been back here, but we came and found this trade right here. So we took this short at 59.58. When I see this, right, a known pattern, an impulsive move, a corrective pattern, clear signs of the next wave beginning with lower lows, lower highs, growing negative momentum, breaking through the cloud, that's what I call a high percentage trade. And look, we're in it. And we got a price target using Fibonacci extension lines. So we're just extending and saying most continuations, most wave fives will end between 61.8 and 100%. So that's our price target. We're taking a target at the top end of that range. And so far we're doing really well. We are in, what, 23.9% profit on this trade. So I'm pretty pleased with that. You can see it's on my little tracking table here in TradeStation. All right, 23.3% profit on that trade so far. So pretty pleased with that. Okay, let's keep an eye on the clock here. We've got about 9 minutes till the report comes out. I'm watching, I've got a watch list here. You know, in tech we had last Friday and then Monday we had a little bit of a sell-off on some of the tech stocks, and they look like they are poised potentially to continue that correction. So I'm watching Apple, Nvidia, STM, and Netflix. This morning in the trade room we had about 10, and we narrowed it down to these as possibly the best candidates. If the market heads down, I'm looking here at Apple, and I like Apple on a 60-minute chart. Let's go look at this. So there's the big move down from last Friday. Look at this retracement right up into the Fibonacci zone, and now we got pretty good evidence that it's starting back down again. So if the overall market starts down after the Fed announcement, I'm going to jump on a trade in Apple. I'm going to go short Apple, and I think we got a price target zone potentially, if this corrective wave really gets going, of down to 131 to 116. So there's plenty of profit available here on Apple, and I'm just trying to pick my entry off the 60-minute chart. Oh, short for sure, Dragonfly. Short for sure on Apple if the market heads down. If the market starts to rally after the Fed news, then I'm going to hold off on this Apple trade. But if we get a pretty good move down on the market, and again, using that trade the news setup, I want to see an initial move, a little correction to it, and then a continuation. That tells me it's really going to go. Fair question. Phil's asked, or no, John saying which put. We can get that teed up now on which put I'm going to take on Apple. I'm able to look at Forex, Phil. The same techniques apply. I don't personally look at it that often unless, you know, in a thing like this somebody wants to see a particular pair. Because I primarily am trading the stocks and options and taking some cues off the futures market. Let's look at Apple and pick out the contract. I have a very specific method for choosing the contracts I want to trade with. I am purely directional. I don't, because I'm trying to take a direction, right? I've got a downtrend here on Apple, and for me, the lowest risk, highest return approach to options, the directional trade, is simply to, you know, on a short trade, I just go long the puts. I don't do any winged creatures, no iron butterflies or condors, no spreads, right? I protect myself through my position size and through stop placement, stop management on the chart. So I can control risk very tightly with a one-sided option contract. You know, I never, you know, you hear articles, people go, oh, option buyers, you know, 80% of the time they lose. Well, not me, because I'm driving my option trade off the underlying shares, and they hit the stop, I am out of it. I never take contracts to expiration. They never expire worthless, and I win 60-70% of the time on my option trades. So there's that. I like the August time frame. This is a short-term trade, but if it really gets into a nice trend, I don't want to be forced out because the July contract will expire in a few weeks out from here. And so I go deep in the money with a high delta, right? And I want to get the best price for the best delta possible on my option position here. So I'm looking at the price break here, and the delta values, and I think I really like the yeah, I wish it was higher, but there's a huge jump from the 155 to the 160. So I like the 155. I would be buying the 155 August put on Apple if my criteria is met here. Okay, we are about 5 minutes out. Daniel got a long question. You're basically saying, aren't we better off going counter trend? Not me. Not me. Trading according to the rules I just laid out, right? Looking for an impulsive move, either trading the correction or the next continuation of that. I've been doing that pretty consistently for about 6 years, and I'm very profitable, so it's working for me, right? And I'm publishing my trades, and a couple hundred people are following along, and they're profiting too. So, you know, a trading system has to make sense to the person trading it, and there's more than one way to do it. This is what I'm doing, and it's working for me, and folks that I'm training and are following along are pretty happy with it. But there are, you know, you don't have to agree, and you could do something radically different and be profitable, and that's cool. In fact, I was just showing the trading room this morning, the trades we called out in the room. Here we go. Where is it? Let me bore you with this. I'm going to go find it. I don't want to lose track of the announcement coming out. Yeah, I'll look at that later. I'll look at that later. Anyway, we got some pretty stunning success going on. Jeanne asks, what's the advantage of buying one put over selling 100 shares short? Well, here's the advantage. Okay, if you go short the 100 shares and you're right and it goes to the target, you're going to make more in terms of absolute dollar profit. Absolutely, right? But if you're wrong and it goes and hits the stop, you're going to lose more. The way I manage my option trades, say I buy one contract, right? And what was the price on that? The price on that is 1140 is the ask. So if I'm wrong and I end up hitting my stop and get out, I'm probably going to lose $200-300. That's a tolerable loss per contract. If I'm right, I'm probably going to make about $1,000 if I hit my target, right? $1,000 to $1,500. So that risk to reward is huge, right? It's 4 or 5 to 1. If I do the shares, right, and I hit the target based on my position sizing and the same amount of capital potential, you know, loss, I'm probably going to lose about $1,000. So I could lose more, particularly if it gaps through my stop, which is possible, right? And in order to buy 10,000 shares of Apple, you're going to be tying up about 15 grand versus tying up $1,100 for the option contract. So it's way more capital efficient. We are like 2 minutes out here. Hey, William, glad to have you here. So let's see. Really, gold and ES are the ones that are probably going to have the biggest reaction to the announcement. And again, we're about a minute out. So I'm going to watch the charts. I'm going to have my eyes glued here and look for trade setups. If I'm sure some of you are watching news feeds, you know, whether it's, you know, Bloomberg or Forex Factory or Trade the News. So type in when you see the news what they're saying. Type it in here. Let us know. Because again, I'm going to watch the chart because I'm interested in the news. The news matters. What the Fed says absolutely matters. But I don't try and second guess what people are going to do with that information. I watch the reality, what they're actually doing with that information. So, all right. Miss JD's looking to scalp ES. All right. Good luck. We're close. We're going to see something happen here any second. There goes gold. Wow, there goes gold. By the way, we're long and bullish on gold. That was our forecast. The target zone was above this green line here. We'll see if that lasts. All right, William, first out with the news. They're going to raise rates quarter point. All right, there's Miss JD. Well, gold's going a little nuts. The conference is pushed back to 230. Guess they have to go get on the same page, get their notes ready, huh? Well, that's normal. The normal is the conference at 2:30, is it not? They dumped the press release at 2, but the actual conference is 2:30. Okay, William says it was CNBC. Well, okay. I was sitting here wondering if my chart was locked up because look, ES is doing nothing, but gold's going nuts. Big, huge spike up, 100% retracement. 100% retrace is, I don't try and trade that. This could turn into a new impulsive move, but let's see what it does. We'll just give it a little bit of time to settle here. Again, if we do get an impulsive move, then I'm looking for it to correct and then go the direction again. So I don't think trying to catch it at the moves drop is a good idea. You get this kind of volatility and you can get some slippage, you can get stopped out. So let's just let it settle. LP says the VIX is whipping around. I bet it is. I bet it is. So the ES started down just a little bit. Now it's heading up. This oil could care less. It's doing absolutely nothing. Hey, Jans. Glad you could show up. Yeah, we'll go look at some individual charts in a little bit. Be happy to do that. Just want to watch this current price action. So right now the 10-minute ES is right at the Ichimoku cloud. You can see it right here. There's an important high. I've got this high up here at the body of the highest candle. I'm not counting the wicks right now. Now look how ES is faltering. So if it breaks through this cloud, we could get a pretty good up move on going. But if it really does fail and reverse from here, it could be going down. So there's my prediction. I am 100% sure it's going to go up or down. But we're at a key level here where I think it's important and it's going to decide. We don't really have a clear direction, do we, at this point? Let's keep watching. Meanwhile, I'm going to take a look over. I'm going to peek over at our open positions from the trade room. We got some really nice ones going on here. We got 1, 2, 3, 4, 5, 6 short trades. 1, 2, 3, 4, 5, 6, 7 long trades. Short trades, some of them are just going our way. They are sweet. APC, we went short this one a couple weeks ago. We went short at 59.58. It's down over about 4% today. What a beautiful thing, huh? Very nice. Oh, there goes ES. So let's watch this high and see if it reverses off that. It's currently up through the cloud. Let's see if this price bar can close and make it through the previous high. Anybody else totally dismayed every time the index is put in a new high? It's like, really? But that's the reality. We're long several positions. As long as we're going up and the technicals are there, we'll do it. It's a little baffling. There will be a correction someday. We'll keep going up with the market as long as it's going up, but also keeping a very wary eye out for the next big correction. William, you said 2,700. Is that your target for the S&P? Yes, $2,700 target on the S&P. Okay, well that's bold. Dow just broke out. Well, it's up quarter point. Well, I'd say it's up. I don't know if that's a breakout quite yet. Good question there, Dragonfly. What percent do I think the correction will be? Let's go take a peek at it. I'll show you. One of my favorite quotes is from Jeff Bezos, CEO and founder of Amazon.com. And one of the things he says is, we don't have to guess. We have the data. So here's the S&P 500 on a weekly chart, 8-year bull market. So where would this correct to? If it follows historical patterns, the correction for the S&P from the current level, now if it goes higher, we got to readjust this, but the correction from the current level would take us down to a range of 1832 to 1460 with a midpoint of 1646. That would be a normal, healthy, cyclical market correction that it's done for about 100 years after a big run-up into a Fibonacci retracement zone. So that's the high probability when it starts. It could be right. It could go to 2,700. If you are right, I will buy you a beer, William. I'm not quite bought into that number yet. You remind me, okay? Now he's saying at least 26. Yeah, there's not really a good entry on ES yet, Ms. JD. Don't see it. Jan said he'll buy you a beer too. Look at oil. That's unusual. It hardly ever channels like that, even when there's nothing going on. That's really unique. I'll give you my opinion, Miss JD, but remember, you got to make your own decisions about trades. All trading involves risk. So don't blindly follow me. It's got to make sense to you. Now, but with the indexes heading up, I was really hoping that it would go down and I could set up those shorts that I talked about on tech, but I don't think we're there yet. Doggone it. But reality is reality, right? We're not going to go force a trade. We're only going to take it when it makes sense. Let me go back and look at Apple on a 60-minute. No matter how badly I want it to be there, you can't stare a pattern onto a chart. Do I think the press conference at 2:30 will move the market? Probably, because that's where they start offering some forward-looking comments and some discussion about the economy. All right, so yeah, possibly. And people are hanging on every word. How would you like it if when you shared your thoughts, billions of dollars changed hands? That'd be a lot of pressure. Boy, look at that. So we do have a bit of an impulsive move here on ES now, and we do have a retracement. It's not as big and dramatic as I like it. I like to have a big move and then a big retracement, but it is there. So if we get evidence of it going up, there might be a long trade here on ES, but not yet. It's not proven yet. Let's watch that. Brian says one word can trigger the algos. Yeah, they can, for sure. We don't really have a clear trend direction from this yet, and this is starting to retrace pretty deep. Look how it did stall on the 10-minute chart right around the cloud, right? The cloud so far has predicted a bit of resistance. We'll see if that holds or if this trend continues. Seems to have settled for a minute. Somebody had asked about a stock chart a little bit ago. Let me see if I can find that comment. Oh, you were just saying, how are you? I thought that was HRU. So anybody got any symbols? If it's Forex, just give me the pairs and the time frame you'd like to look at, or stocks. And my default would be daily, but if you have a different time frame, just type it in. Jan says EUR. Now is that a symbol? Is that a stock symbol? No. Give me the full pair that you want to see if it's Forex, please. Tom, MOBL. Well, that was a beautiful trade, but it's too late. Missed it. This is a wave 4 correction, so here's the big impulsive move, and here's the expected correction. I'll bet you it's already in the price target zone, though. Yep, it's in the price target zone. So the next move on this would be to let this finish and catch the next move down, but we're quite a ways away from that, so you missed it, man. CC. Yeah, I don't get 6E, Jan. I don't get that futures, the currency futures for the euro. Sorry. CC, this is looking close. So big impulsive move up, and it's starting to show clear signs of correcting. We've got lower low, lower high, lower low, lower high, lower low, lower high. We'd like to see it break the cloud. There might be a cool entry right here, right about here, as it puts in a brand new low at that level. And if it does, I would put my stop right above here at this previous high, and we would have a target on this one right inside the price target zone, this retracement zone. And look at the reward to risk, right? The way we look at that is the distance between the entry and the stop versus the distance from the entry to the target. And this is about 3 times. That's about a 3-to-1 reward to risk ratio. So that could be a nice trade. We'd be looking for an entry at about 38.44, and that's for Tom. So that's a nice one, Tom. I like that. Tamar, XOM, HP. Let's look at them real quick. Yeah, XOM, it's a messy chart. There's chaos. If you were here earlier, I said I look for particular patterns, right? And if they're not there, then they're not there. If there's no pattern to trade, I can't trade it. I don't see a clear pattern here on XOM. It's a little bit of chaos, so I'm not interested in that one. Sorry. HP, maybe. So HP is a bit of a messy chart too. There was sort of an impulsive move, got a big correction, maybe a bullish move coming next, but it's not qualified yet, so not that interesting right now. Not the cleanest chart in the world either. IRM, Iron Mountain. So this is interesting. There was a wave 3, there was a 4. I'll bet you it hit the Fibonacci retracement zone. After you look at a few thousand charts, you can kind of see it. Yeah, right into the retracement zone. Wave 5 started and then failed. Now it still could take off. It still could make it. Just because it failed on the first run up doesn't mean it won't make it. But you got to get up above the cloud. Probably want to take out at least one of these other highs at about 36, and if it does, then you'll be looking above 40 there. So that might be interesting. There we go. Catch back up here. TBT, is that a bond thing? Bond ETF? Yeah, 20-year treasury. This is bearish. This is very bearish. So we had a nice impulsive bearish move down. We had a perfect correction. And now we can project the price target zone for this, and it's down here below 28. So you could take this trade now. This one is qualified with an entry right here with a price target here at 28.05, call it, and you probably want to have your stop here above this last high, right above about there at about 37.70. That's a pretty nice trade. Now you see this doesn't move that fast. Well, down 3% today, a nice gap down, new low. So TBT looks like a nice short. FXE for LP, Euro, FXE. In a minute, I'll show you a couple of my favorite trades. Yeah, this is a big impulsive move down lately, but then nearly 100% retracement. That's a little chaotic for me. I don't like this one. Don't like FXE. CPE, that sounds familiar. Okay, CPE. This is getting ready to head up, maybe. So we had a big impulsive move up. We had a correction right into the fib zone. Little deep, but not bad. The limit would be down here. So if this can break the cloud and start back up, we should see the next impulsive move beginning on CPE. So it's a little early, not qualified yet, but that's a good one to keep an eye on. Brian. Euro CAD for Gary. Yeah, a little chaotic here. Not a super clear pattern. No, not feeling it on that one. Another, I think previously Let's see if I get this right. See, here's a clearer one. This is USD JPY. This is a little bit better. Nice impulsive move, correction, started up but failed. If it goes again, this one could be nice. USD JPY, if we get back up above the cloud at about 112.5-ish, could have a nice target on that if you're interested in a particular pair. BMY. Is BMY still bearish? Can I explain? Yeah, it's very bearish. So impulsive move down, pretty sloppy correction, but it did. Pretty clear evidence of it heading down, even though it's up right now the last few days, right? What we have is lower lows, lower highs, lower lows, lower highs. If you want to wait for it to turn back down, you can, but it's got a nice target zone way down here below 39.60. So BMY is still looking bearish. That's a Bristol Myers Squibb. We catch back up here. FTR. You guys are typing faster than I can analyze here. This is fun though. I like looking at charts. So we got the press conference in about 9 minutes. Well, this is a pretty orderly chart, and one of these days it's going to correct up. No evidence of it. Well, maybe it's flattening out right now, but once it breaks this cloud, there could be a pretty good correction on this chart on FTR up into this kind of a region. Oops, I didn't catch the bottom. Rescale this, redraw it. Could be big. Could be really big. Up above, call it $4. So from $1.28, that's not too bad. So Thor, what am I long gold with? Well, we're waiting for an entry. I'll show you what my favorite trade. In the trading room, we have a watch list here of symbols that we're checking out, waiting for entry criteria to be met, and it's Newmont Mining is the one I like right now. And we're looking for an entry. We want to see, there's the big impulsive move, right? There's wave 3. Here's a perfect correction. Wave 5 is trying to get started, failed a little bit, but if we can put in, we got a high, higher low, a new high, not very big, higher low. If we can put in a meaningful high, if we can break above these last ones at 35.60, you got a nice target zone. We get a good trend going here on Newmont. And it's related to gold. It's gold mining stock, but it's not moving perfectly with gold. They got other concerns. So it's got a price target above $48 if we can get an entry at 35.60. So that's my favorite gold trade right now is Newmont Mining. Not ready yet though. Got to put in a new high. What's my trigger on the Apple short? Let's go look at it. I did want it to I wanted the overall market to be heading down. And I'm looking at this on a 60-minute chart. Yeah, at this moment I want to see a new low. I want to see it go below this low. 142.60 would be my entry on Apple. So we're a little ways away from that just yet. VRX, that's on the watch list, Peter. VRX is on the watch list. We're looking for an entry. We really want to see this take off. Now VRX, it's been a poster child for the evils of big pharma, according to several politicians. But the correction on this could be monstrous. We're looking for an entry at 14.56. If so, I'm almost embarrassed to say the target. It's over $100. That's real. We've seen it happen before, right? If it could get going, that rally could be driven, could have nothing to do with the fundamentals of the company. Could just be shorts being covered, right? A lot of people are short VRX. So we're looking for an entry at 14.56, and we think there's big potential in it. People kind of look at me funny when we go long troubled companies, but we went long Lumber Liquidators, kind of a similar chart. We went long when it broke out of this after getting absolutely hammered. Same kind of setup. We went long on lumber liquidators here at 1897 and made some really nice profit up to about 30 bucks. So there's that. Citibank for William. Let's go to, yeah, we're on daily chart. One of these days, but we don't have evidence of this trend turning down just yet on Citibank. Too late to go long. I do not like to chase mature trends. Okay. You got in. What'd you get into, William? Long? Long on Citibank? Good luck. All right. Hope it works. I mean, it could keep going up. I just don't like to chase trends. I like to catch them early and stay with them. So who knows? Could work out. So I told you I'm looking at Newmont Mining. That's one that we really like. We're not in it yet. Here's a larger cap. It's doing really well. Still time to get in. This is MKC, McCormick and Company. So I'm long this one. We got in at 101.40. Look at this. Nice pattern, right? Big impulsive move. Nice correction. Next move starting. And we got a target on 114.09 on McCormick. So there's still time to get into that one. Still plenty of profit left there. I like Century Aluminum. It's pulling back a little bit today, but overall it's really good. We were in it. We actually, I have a method where we actually double down, but it's not like the typical double down. Right? We scale in using specific math and can add to a position without increasing risk. And we did that. We added to our position. We took an entry at 14.17, and then our rules were meant to add to it. So we added to the position, and then late last week it popped up 14%. So that was super exciting. That put us in a lot of profit. It's pulled back a little bit. You expect that after a big dramatic move like that. Still think this is very bullish and a little tight in terms of getting in there. You could, but recognize that the target zone is not too far away. We're in what, 14.5% on that. Been in it about a month, so that's a little over a month. That's pretty good. Pretty happy with that. Yeah, Thor, I scan not for gaps. I've got a whole webinar I do on how I scan. It's a multi-step process. If you go onto my website, I believe there is a scanning webinar recorded there, or onto my YouTube channel. Just type in "Follow Me Trades" and got a YouTube channel, and there's a whole methodology to scanning. And it's pretty fun. Okay. I think I caught up on most of the symbols. Brian for VDE. Okay, so what we're looking at here, the current sequence is this bullish move and a correction to it. So we're looking for it to break the cloud and start the next move up. Now it's got a little move off the bottom and a pullback. Let's see it break the cloud before we try and take an entry. But if it does, you got a pretty nice target up here, up above 110. That's not bad. You got a Vanguard account? Well, that's okay. Nothing personal with them, right? And it's a long trade, right? So you're rooting for them. Yeah, John, not much. Let's look back at the futures. We've been looking at stocks here for a while. Yeah, kind of chaotic, isn't it? Nothing really going on here. Gold's taking a bit of a beating. Yeah, I think we have to focus on long term. We didn't get any kind of drama. Now, the press conference should be starting, so we've got Fed speak, and that may break things up a little bit here. So that could get something going. Jans, JBL. And he says that's a stock. I thought maybe you were commenting on the stereo system or speakers. That's a beautiful trend, nice long trend, but it's too late. Again, I try not to chase trends. And the next move on that would be a correction. It's not starting yet. There's the Euro USD. I think we looked at that before, or an ETF, but there's just no pattern. It's just chaos right now. So there's no trade for me on Euro USD on a daily chart. Doesn't look good. Carlos, is that one of my YouTube videos there that you posted a link to? XLF is running, but look at this. This has been a really nice trade. This is the S&P Financial Spiders ETF. We got some signs here. This thing's starting to run out of steam and maybe correct. There could be a good correction coming on SLF. Oh, Fed conference link. Okay. Yeah, I'm going to stay focused here and just see what the market does. So we were talking earlier, was having a discussion about indicators and results. Was talking to one of the guys in the room here about counter trend versus trend. And here's the results in our trading room since March. I started a bit of a new approach in tracking every trade I identify as good in March, and then tracking the results on that. And so we got a 55% win rate with a payout ratio of 1.7. So that's a key statistic. That means the winners are 1.7 times, almost twice the size of the losers, right? So a $50,000 account in the trading room would be up 11.6% for closed trades. And here's a quick snapshot of these are the actual trades we're tracking in the trading room. Here's their current P&L. And so if we just were to sum this up, both the longs and the shorts, just go ahead and post this in here real quick. Love Excel, isn't it a great tool? And just take a sum of all the open trades. A couple are underwater, but most are in nice profit. So $16,000 in profit if we were to close them all based on a $50,000 account, position sizing. Add that to the closed trades we've closed. We got over 20 grand in profits in the live trading room. So trend trading, going with the trend, is working for me just fine. Like I said, I run a live trading room and a stock picking service. They're separate services. Trading room, you come in the morning each day and we monitor the markets. We call out some trades. Stock picking service, you don't have to show up. I publish the trades that I'm actually taking in my account with my money. They're both doing really well. If you're interested, while you're in this webinar, I do have a special offer, and that is you can try my stock picks for 30 days for 39 bucks. So that's a really good deal. That's a discount. The list price is $127 a month. you can try the picks for 39 bucks and then get it for a discount ongoing for 97. And I'll put that link over here in the webinar thing. So you'll see that link in the chat area. And but wait, there's more. So you can try the stock picks for 30 days for 39 bucks. Or you could join the trading room, 59 bucks, a discount from the list price for 30 days. Both of these 100% money back guarantee. So you can try it, and within the first 30 days you don't like it, send me an email, man. I'll refund your money, no questions asked, no hard feelings. And then if you sign up during this webinar before I hang up, right? So if you sign up before I hang up, either the live trading room or the picks, I'll give you a 30-day free trial of the other one. Only good during this session while we're online. So buy one, get one. If you sign up for either the live trading room or the stock picks, I'll give you the other service for 30 days for free. And again, whichever one, you can get a 30-day money-back guarantee. And that link that I've posted, you can go read more details about it. Okay. Yeah, the quantity is absolutely different per share, per trade. And what I use is a formula, Jan's. I use a formula of 2% risk. So we take the difference between the entry price and the stop price, and say, you know, if we're entering a $3, a stock at $3, and the stop is at, let's say we enter it at 5 and the stop is at 3, that's a $2 difference. Then I divide that into 2% of the account, and that tells us how big of a position to take. 2% of a $50,000 account is $1,000, so you divide $2 into $1,000, and that gives you what? 500 shares, I think. That way, if we hit the stop, we lose no more than 2% of the account. 2% is a tolerable loss. 2% is a very tolerable loss. So that's how we position size it, right? And then we only take trades that have the potential, that have a reward to risk ratio of greater than 1, hopefully 2, 3, 4 times, so that our average trade when we win it is bigger than the average loser. Yeah, it totally depends on the stop loss, right? So it's just that simple formula. Entry minus stop divided into 2% of the account tells us how many shares to take on the trade. So we're still not getting much. Well, gold's tanking, right? We should have been watching. There could have been a short trade on gold, but it was pretty chaotic, right? It shot up in the beginning, so there wasn't really that real clean pattern that I was looking for. And oil still continues to care not a whit about what the Fed is doing, huh? So Ron, the live trading room is pretty similar to what we're doing here. We watch the futures market, and then we go scan for individual trades on stocks, ETFs, and I call out those trades and we track them, stock and ETFs. And typically I call out an option contract, just like we did earlier. Somebody was asking about the contract on Apple, right? If there's a good option play for the stock trade, I prefer to take my trades with options, right? And I do quite a bit of teaching too in there and talk about how we do it and why we do it, all that. Speaking of Apple, I wanted to look back and see if it was getting closer to my entry. Not really yet. Not really. It does look very bearish here on the 60-minute chart. Do I trade NQ or TF on the other future indexes? I look at them occasionally when there's something special going on there. NQ in particular, yeah. But I look for more to take our focus to sections of the market to go trade. The actual trades that I call out and trade are on stocks and options, not on futures themselves. Can I post that P&L spreadsheet? It's posted when the subscribers to the trading room. It's posted in a secure area of the website that they have access to. And I also post, so even if you can't make it to the trading room, I post the list of open trades with the current stop, all the updates to it, and to the watch list and what the trigger price to begin. So subscribers to the trading room have access to all that information in a secure area of the website that once you sign up you have access to. And again, you can take it, it's a pretty affordable trial, said, and 30-day money-back guarantee, so pretty low risk. $59 for the trading room, a $39 trial for the stock picks. And during the session, if you sign up before I hang up, you can get both. I'll give you the other service 30 days for free. That way you can pick which one makes sense for you. Well, a reaction to the Fed news here is kind of a bust, huh? Not really much happened. The gold had run up this morning. It's given all that back, so that's a pretty chaotic scene, and nothing clear here about what the S&P is doing either. William, you said they're all showing red on CNBC. Think we need to buy. Not sure. What's all showing red? Here it goes now. Jans was just typing. Jans was just typing that he's got a vertical spread on and he hopes the S&P does nothing. And then it started dropping. Hey, there we got a couple of orders coming in. Welcome. Thanks for you guys signing up. We'll get you all set up. You can be in the trading room tomorrow morning. Ken, the trading room runs Monday through Thursday, 9:15 a.m. Eastern to 10:45, and that's 6:15 to 7:45 Pacific. Boy, look at the ES go now. Hey, I'm going to go check that Apple trade, see if, see how ES just took out a previous low in the 10-minute chart? That means something right there. We got a nice trend probably beginning here on the ES. Let's go see about this Apple trade. That was kind of my favorite. Let's take a quick look over at the others. NVIDIA was another potential short. And I think I like Apple better. Let's look real quick at STM. Yeah, not, no, there we go. That may be already a little close to the target. That's not bad. STM is not bad. Do I show my trades on the charts along with STLs? Ron asked. Yeah, absolutely show my trades. What's STL? Stop, target, and loss? Is that what that's STL? If that's what you mean, absolutely. Every trade we take, I define a stop level, a target level, and a stop loss, an entry, a stop, and a target. I define that on every single trade. Yeah, Netflix already kind of far down. Well, it looks kind of like Apple. It looks like exactly like Apple. Let's see what it looks like on a daily chart. Hasn't quite broken the cloud yet. I think Apple's my favorite. STX is starting to drop. That's a trade we're already in. When we look at the potential target from 144 down to low 130s. So I said I wanted to go with Apple if the market was going down. We just put in a new low here. So let's go ahead and rock this Apple trade. I'm going to do it. It looks good. I had said this target level when the market was going up, but since we got pretty good market momentum going down. So my entry, here's how I mark these trades up, right? My entry is going to be here at current price. My stop is going to be pretty tight up here at this last high, right up here. And then my target is actually going to be from the daily chart. So my target, let me get that drawn from a different time frame. My target on Apple is right here. Way down there. It's huge. And I just code these real quick so I can come back and see exactly what I was thinking. There's my target price. Yeah, I don't use a number of ticks as a stop loss. I use I'm using Fibonacci retracement levels to project price target zone. And then for my stop, I use Dow theory, which is the last previous high after a new low goes in. And then I derive my position size from the stop versus the entry. I don't use a static position size. So there's my stop. It's at 147.82. My entry is 144.60-ish, and my target is 131.64. And like I said, I plan to trade this one with a option contract, and we had picked out a nice one, which was here. On Apple, it is the August 155, and so these are currently, the price went up because Apple went down. 12.15, 12.20 ask. So I'm going to grab two of those bad boys. Which equates to about 2% of a $100,000 account. Yeah, wrong order increment. Yeah, let's so I got a nice fill on Apple at 12.20. Yes, Jan, just technicals. He says just. Just. I believe Apple's going to drop because of technicals, and I find them to be more accurate than fundamentals. You know, fundamentals over multi-years, right? If you're buy and hold, if you're Warren Buffett, yeah, fundamentals matter for the long term, but in the short term, my stock trades are on daily charts are typically about a month, right? A month to 6 weeks. This Apple trade may be a little shorter, right? And in that kind of time frame, I think technicals absolutely rule, and we've got a very clear bearish case with a price projection on Apple here based on technicals after this impulsive move and clear evidence of the correction beginning of it correcting down into the zone. So that's my, well, you know, there's fundamentals, there's political, there's all that stuff, right? We can only trade according to the reality and the data in front of us. Any trade can lose. This Apple trade could absolutely lose. I control the loss through my risk management system. So if Apple hits my stop, it's a good point here. If Apple hits my stop, what's going to happen? So my current stop is at 147.82. 147.82. And my target is at 131.64. So I just whip up my little deal here. And I've got 2 shares on, right? So let me make sure this is right. Let me get this corrected here. That's set for 5, so let's get it to 2. There. Okay, so what was my stop? 147.32. So if it hits 147.32, and I'm going to go, if that underlying shares hit that stop, I'm going to go close the position. So here we are, 147.32. I'm going to lose 400 bucks, 450 bucks. If I hit my target, which is 131.64, I'm going to make $2,200. So a $400 loss versus a $2,300 gain, and I got 2,200 bucks in play. That's how it works. Yeah, it's a very nice risk to reward. And I've only got $2,000 tied up out of a $100,000 account. I got plenty of capital to go do other trades. Fred, yes, I absolutely send an email when we're on the stock and option pick service. When I'm getting into a trade, I publish them in advance. I go, here's the entry price, and then I send an alert, okay, we're in. And then if we move a stop, if we take profit, every step of the way, you can get an email or a text alert or both, right? That's set up as part of the subscription. And my target on that Apple trade, you may have already seen the answer to that, Chris, is 131.64. Well, thank you, Janice. He said my approach makes sense. Yeah, hey, Chris. Fred, do I tell you whether I'm buying stocks or options? I give the parameters to trade it either way. So like on this Apple trade, you know, the parameters are here. You could short Apple at, you know, right now and have a stop at 147.32 looking for a target here. And we trail that stop down throughout the trade, by the way, and I give updates on that. So you could just short the shares, you know, or you could trade it with the option contract. I gave the details on the option contract, and that's how I do it on every trade. I give the information to trade it however you are comfortable. If there's an option play, that's how I'm trading it with my money. Right? I prefer an option trade. This is the August 18 expiration, 155 strike put that we're trading the Apple short with. Is that cool? Jans, no, I never sell options. I just buy. I'm a directional trader, and for me, this is the lowest risk, highest profit approach, is when I have a clear direction on the chart In this case, it's down. I go buy the puts. If I got a bullish trade, I go buy the calls. Right? There's other cases and other situations where selling options, I think selling covered calls is a good strategy if you're a buy and hold kind of investor, right? Why not generate some extra income off your position? So there's other, if people do spreads and all that stuff, there's lots of approaches. This is what I do that matches my chart analysis and my trading style, and it's what we're pretty successful at it. How do I decide if I want to close the Apple trade early? Well, what I do is watch price action. And so we're looking at right here, we got lower lows, lower highs, looking for new lows. We trail our stop down as the trade plays out, and we've got key areas along the way where we take profit. Once we get into profit, we start crossing Fibonacci lines and getting reversals deep in profit, I start scaling the position back, taking profit. But the last portion of the position, I let it get stopped out with my final stop. I'll show you an example here of a trade that we just wrapped up. Right, this is a classic one. Some more real estate here. We just closed this in the stock and option pick service. This is Baxter. So we took an entry on Baxter here at 48.63, and all along the way we trailed our stop up to these different higher lows as new highs were put in. Right, there was the final one. We took profit when it crossed the target line. We took profit at reversals up here, and then the final portion of the position got finally stopped out at the last stop. And that's how we manage the trade. That we want to stay with a trend, right? It actually went higher than our projected target, right? Way back here, we were projecting this target zone, and it went above it. Same thing with Alibaba. We traded that. Right, took an entry back here, traded this thing all the way up, got stopped out here. Later on it gapped out, bummer, but we had a nice win on Alibaba. We are still in, which one? Been in it a long time. PAGP is a short that we're, managing the same way. We got into this, you have to kind of blow the scale up to even see it. Right. We got into this one at 31.76. Initially, our stop was way up here. We've trailed our stop down to here, and look at this baby drop, man, over 5% today, 4.5. Sweet. So we're deep in profit here. We're just going to keep staying with this trade and let it, as we trail our stop, let the market, let price action take us out. Otherwise, we just want to stay with it, not jump out too soon. Yeah, Jeff, if you go to my homepage, I've got my track record for several years. Let me show that. We're just now starting to close enough trades from 2017 to start posting those results on the web page. But on my web page, here's a table showing the returns over the last several years, and you can click on any one of these, and they give you every single trade we took. So I believe in transparency, right, and showing my trading statistics. So there's every trade we took last year, right? There's about 68 of them, and then you can see the year before. Right, here's a table summarizing it. So everything's there. FollowMeTrades.com. The trades do differ a little bit from the trading room to the pick service, right? In the trading room, I'm calling out more trades that meet my criteria, but so in the pick service, every trade I publish to the pick subscribers, I take with my own money in my own account, right? Now in the room, we're scanning for trades constantly, and I find more trades than I could take, right? No matter your account size, at some point your capital's all tied up, right? Or you're overweighted in a sector, other reasons like that. So I call out more trades in the trading room, but there's some overlap, but it's not perfect, okay? But they're different services, different objectives. For the long-term trades, Daniel's asking how long is your typical trade. Long-term, the typical hold time is 4 to 6 weeks. We do take some on 10-minute or 60-minute charts, and it's shorter. Some are as short as, we were in a USO trade 2 or 3 days, and I just got into another short-term USO trade. and expect to be in it probably less than a week. And I segment them into short-term versus long-term. Live room, I don't know if it's more risky. There's more trades, right? There's more trades. Not every one I'm taking, right? Not every one I'm taking. Not trading futures, right? We use futures to look for market direction, right? But I'm not trading futures. I like to trade a little bit longer time frame, and I'm not comfortable holding futures overnight. So, but they give us a great preview, and looking at them, they give finer resolution on market direction than the index. They trade 24 hours a day, right? So we got good data there. You're welcome, tomorrow. Hey, we got a handful of people signing up here. That's cool. Look forward to having you guys be part of the service, and check it out. Yes, Jans, the pick service represents my live trading account that I'm placing with my money. Yeah, Ken, you just signed up for the picks. Once I get offline here, I have to go manually do it. The people that sign up for either service right now, I'll go set up the BOGO for you. So later today, you'll get an email with the link and a welcome mail and stuff to join the trading room tomorrow. Hey, Jeff. Yeah, I do those occasionally, and so I think you're on my mailing list. So I do webinars occasionally on various topics, and happy to have you join. Jan says he likes my honesty. It's rare on the internet. Well, it's important to me. It's important to me. So thanks. And Jeff, pretty much anybody, if you're interested, if you're like, man, I'm intrigued, I want to learn more, I do have run a variety of webinars, but let me type in, I can send you a link. I have a link to my calendar, and if you would like to just talk and just ask questions, I can show you stuff, email me. I just put my email. It's dean@followmetrades.com. I'll send you a link. You can put time on my calendar, and we can talk, and I'll answer any question you have. Right? My service is not for everybody. That's fine. There's a lot of different approaches. When your money's on the line, you have to trust and feel good about the system being used, right? And my thing's not everybody's thing, but a lot of people are following along and pretty happy with it. Yeah, Jan's asking how big does your account need to be? I recommend at least 10,000 US. Right? It doesn't really matter if your position sizes are the same size as mine, right? It's proportionately on a P&L basis, percent P&L basis, whether you're matching my results. All right. So for the subscription fee, I think it makes sense to be trading at least a 10K account to cover the subscription fee, and with historical returns, you should be doing okay there. All right. I also offer training. If people want to jump in and follow along, and then you go, yeah, at some point I don't want to pay a subscription. I'd like to do it on my own. Occasionally I run courses. We're in the middle of a 6-week master trader small group training that people who have been through that are they give really good feedback. Really in-depth 6 weeks of training on my trading system, everything I do. Well, like I said, the market reaction to the Fed is kind of a bust. We are down. The trend is down. And I did go ahead and put that Apple trade on. I like it. Uh-oh, down 40 bucks on that position. I'm up on the USO trade. Yeah, Oleg, I did post it in the chat area. It still should be there. I can post it in response to your question too, though. Happy to do that. Were you interested in the picks or the trading room? I'll give you both. There's the picks. And here's the trading room. Again, if you sign up during this session, you get the other one for free for 30 days. So if you're not sure which one's best for you, give them both a try. Buy one, get one free. Super. Good news. Good news. Look at oil. This 10-minute chart, man, it's just doing nothing. Jans, how many followers do I have? Got about 200 following the stock picks and about 150 in the trading room. People often ask at what point do you have too many followers and they start to move the market? I think we're a long ways away from that. And if I'm fortunate enough to get, a much bigger number, we'll segment it into different services. Yeah, thousands might move it. Yeah, and particularly, in big cap stocks, Apple and stuff like that, you would, I don't think I could have enough people to be a blip on that radar. I avoid low volume instruments anyway. Yeah, Jan's commenting about U.S. economy versus rate hikes and the Euro USD. Trying to guess how all those moving parts fit together is it'll make you crazy. So that's why I just watch the charts, the reality of the charts. I'm a technical trader. Because that's the collection of what everybody thinks about that data and how they're acting on it. It's not that the data doesn't matter. It's just how people are responding to it, what they're doing with the information. That's reality, and that's right in front of us. Right? I don't need to listen to the weatherman to tell me whether it's raining outside or not. I just need to look out the window. He's wrong half the time anyway. Look at ES go now. Brian said, now Apple is booking, hopefully down to the downside. Did we take our entry at the right time? Oh, that's a beautiful thing. It's just luck, right? Just luck. Just like our oil trade this morning. I think I showed that at the beginning. I don't know if you guys were here. We took an entry on oil short. Where was it? I'll show you on the range chart here. We took our entry right here this morning. Short entry on oil. I got witnesses. Some of the people from the trading room are here. Oh, there it goes. So if you want to get on the fun, got those links posted. Give it a shot for 30 days. Within 30 days, it's not your thing. Money back guarantee. No questions asked, no hard feelings. I don't want anybody, if it's not your thing, man, that's cool. But it's worth giving it a try for a lot of people. Oleg, the live trading room hours are 9:15 a.m. Eastern to 10:45 Eastern, and that's 6:15 Pacific to 7:45 Pacific. Lowell said he took the Apple trade but went out to September. Nothing wrong with that. You probably paid a little bit more, right, for the 155 if you took that strike. But yeah, it could be on a pretty protracted downturn here. Good to have you here, Lowell. You're kind of lurking in the background. All right, Greg said they got to go. Greg and his wife are trading partners. They're a team. It's pretty cool. They said nice call on USO and Apple. Yeah, we did well. We did well. Hey, have a good trip. Daniel says, why was there a rally at 2 versus fall off at 2:30? I think it was the comments in the press briefing versus just their press release on the movement. Oleg, 9:15 to 10:45 ET. 9:15 to 10:45. All right, you're welcome. Well, it's 12:15 p.m. here, West Coast time. So that would be what, 3:15 East Coast? Let me give it about 10 more minutes. If anybody else had questions, had charts they want to look at, and then I think our we've got a direction here on the market. Our post Fed move has happened. Interesting that gold and oil, gold and ES move pretty much in lockstep. They don't do that very often. Typically, they're moving the opposite directions. A little unusual. Wow, I'll bet NQ is tanking, right? NASDAQ Composite's down almost a full percent, double what the S&P's down. Dow's hardly down at all. Let's look at the NQ. That'll be fun. Oh, John, you went out to October. Good. Oops, what happened? Hey, Jans, glad you could show up. Hope to see you around. Yeah, look at NQ, man. Dropping like a rock. Led by Apple. Yeah, you too. Have a great evening and good day. Well, John C., uh, hey, glad to have you. I see you tried a little different Apple. You know, there's another guy with your same name who runs a big options training service. Are you familiar with that? Daniel says, what do I do in the afternoon when the market stops trading? Seems like I have every afternoon off. Well, that's a good thing, isn't it? Yeah, Brian. I love trading. It's fun. It's a great challenge, but there is more to life. That is correct, Oleg. Current target on Apple, 131.64. Hey, you're welcome, Oleg. Yeah, it's about 5 more minutes. We're going to wrap it up here. So if you were still thinking about it, had questions, let me know. Once I hang up, too late to get the BOGO. You can still sign up for each of the services, but buy one, get the other one for 30 days for free. That's over when I hang up. No, Lee, you just sign up. Have you signed up already? If you sign up for one of the services while we're on the line here, you get the other for free for 30 days. Yeah. And after we get done here, I'll go process that and give you guys the extra. Yeah, Lee, you're in. You're in. Yeah, Eileen. Yeah, you took the PIX trial, so you get 30 days of the trading room as well. I will be sending you information on that shortly. Yeah. Oh, John, you met the other John. Cool. All right, Alexander says he's got to exit now. Ms. JDR, you're welcome. All right, hey, we're going to go ahead and wrap it up. This was fun. I enjoyed having everybody here, and I did record it. I'll send a link out if you're interested. That will be up. It takes a little while for it to render and upload and decode all those technical steps. But hey, thanks for being here. All right, Chris, I'll look for it. Said you got an order in there. Okay. Yeah, you're in, man. I'll see if I see the order come through. Hey, Brian, thanks. And for those of you who are already part of the trading room, we'll see you in the morning. Those that just signed up, you'll be able to be there. And we'll be looking for some more great trades and following up on these. Good fun. Hey, trade safe. Use risk control. Keep your winners big, your losers small. Just because we're paranoid doesn't mean they're not out to get us, right? All right. See you the next time. Thanks. Bye.